Elisa Gisser, step away from the desk and keep your hands where I can see them.
Okay. Can somebody tell me what's happening?
Once is a mistake, twice is suspicious. Elisa Dietz Gisser did this to the families of children with learning disabilities for 4 straight years and left a paper trail for every single one.
We're investigating tuition payments that never reached the school's accounts.
There has to be some mistake with the bookkeeping.
She would not get to explain. By the time federal agents finished their work, they would have a paper trail spanning 3 years, a renamed PayPal account, doctored accounting ledgers, and bank records showing more than $1 million siphoned out of an Austin, Texas private school for children with learning disabilities. The money had paid her mortgage. It had paid her credit cards. It had built the in-ground swimming pool in her backyard in Leander. And every single dollar had come from parents who thought they were paying their child's tuition. Before we go any further, I have to ask, when was the last time you actually checked where the tuition, the dues, or the donations you wrote a check for actually ended up? Drop a comment and tell me. And if you are not subscribed yet, hit the button. We cover the cases that the mainstream press never bothers to dig into every single week. Elisa Dietz Gisser was born in 1969 in a middle-class suburb outside Houston, Texas. Her father worked as a regional sales manager for an industrial supply company. Her mother kept the books for a small dental practice in town, balancing the office checkbook every Friday afternoon at the kitchen table while the radio played country music in the background. That was where Elisa first learned what a ledger was. She would sit across from her mother with her own toy adding machine, copying the columns of numbers, asking why some entries were in red and some in black. Her mother told her the numbers had to balance. That was the rule. If they did not balance, you found out why, and you fixed it. She would repeat that sentence to Elisa more than once over the years. The numbers have to balance. Elisa graduated from her local high school in 1987 in the middle of her class. She enrolled at the University of Houston that fall, paid for in part by a small scholarship and in part by her parents. She declared a business administration major her sophomore year. Her grades were not exceptional, but her accounting professors noticed that she was meticulous in a way that most undergraduates were not. One of them wrote on a final evaluation that she was, quote, detail-oriented and dependable, with a strong aptitude for reconciliation work. She earned her bachelor's degree in 1991 and took her first full-time job that August at a small certified public accounting firm in Sugar Land, Texas. Starting salary, $22,400 a year. She worked under a senior partner who taught her how to prepare client tax returns by hand before she was allowed to touch the computer system. She stayed at that firm for 4 years. Her annual evaluations described her as, quote, conscientious, dependable, and unusually attentive to small discrepancies. She married in 1995, took her husband's last name, moved with him to the Austin area where he worked in commercial real estate. They bought their first home in 1998 in a subdivision north of the city. They had 2 children, a daughter and a son, both born before 2003. Elisa worked part-time as a bookkeeper for various small businesses during those years. Pediatric dentists, a landscaping company, a custom cabinet maker. She handled their payroll, their quarterly tax filings, and their accounts receivable. None of them ever reported a discrepancy. In 2010, the family moved to Leander, a fast-growing suburb northwest of Austin, into a 4-bedroom house on a quarter-acre lot. The neighborhood was new, the schools were strong, the mortgage was substantial. In 2012, Elisa applied for a position at the Odyssey School. The school had been founded in 1997 in Austin to serve children with learning differences, including dyslexia, ADHD, and processing disorders. It operated as a 501c3 nonprofit. Tuition ran approximately $23,000 per year per student. The school had about 90 students and a small administrative staff. They needed a bookkeeper who could handle the unique cash flow of a private nonprofit, where tuition came in throughout the school year and donations had to be tracked carefully for tax purposes. Elisa interviewed well. Her references were spotless. The head of school at the time wrote in her personnel file that she had, quote, "the rare combination of bookkeeping precision and warmth with families that we have been searching for." She was hired in the summer of 2012 at a salary of $46,000 per year with full benefits. For the next 6 years, she did the job exactly as it had been described. She processed tuition payments. She reconciled the bank statements. She prepared monthly reports for the head of school and the board. She sat in on board meetings when called upon. Parents who came into the front office knew her by name. They liked her. That was the foundation. That was the trust she would eventually weaponize. The Odyssey School was small enough to feel like a family and large enough to handle real money. That was the heart of the vulnerability. The school enrolled roughly 90 students each year. Tuition was set at approximately $23,000 per student per year. Multiply that out, and the school was processing somewhere in the neighborhood of $2 million in tuition revenue annually, plus another $200,000 to $300,000 in fundraising, donations, and ancillary fees. That is a meaningful operating budget. It is also small enough that one person could plausibly handle the bulk of the financial paperwork. That person was Elisa Gisser. Here is how the system was supposed to work. Parents would receive an invoice for tuition at the start of the academic year, typically billed in installments. Some parents paid by check, mailed to the school's P.O. box, or dropped off at the front office. Some paid by wire transfer to the school's operating account at a regional bank. And some, increasingly through the 2010s, paid through PayPal. PayPal was convenient. It was familiar. Parents already had personal accounts, and the school had set up a business account that received payments under the school's official name. Elisa was the staff member who managed that PayPal account. She had the login credentials. She had the password. She was the one who reconciled PayPal incoming payments against the tuition ledger every week. The ledger itself lived in the school's accounting software, a standard small business package used by tens of thousands of nonprofits across the country. Each student had a tuition account inside the ledger. Each incoming payment was posted to the appropriate student's account, with a note describing the payment method. At the end of every month, Elisa printed a reconciliation report and provided it to the head of school. The head of school skimmed the totals. The numbers always matched the bank balance she could see on the screen. There was no reason to look closer. The board of directors was made up of parents, alumni, and a handful of local professionals. They met monthly. Their financial review consisted of receiving the same monthly report that the head of school received, plus a brief presentation from the treasurer. The treasurer was a parent who volunteered her time. She had a finance background, but she was not auditing the underlying transactions. She was reviewing summary numbers. Nobody on the board was logging into PayPal to verify that every transaction listed in the ledger actually corresponded to a transaction in the payment account. There were 2 outside accountants who prepared the school's annual Form 990 tax filing for the IRS. They worked from the records that Elisa provided. They did not independently verify those records. That was not their job. Their job was to take the books as given and translate them into a tax return. The school did engage an independent auditor every few years. But independent audits of small nonprofits do not typically include forensic-level transaction verification. The auditor checks samples. The auditor confirms balances. The auditor relies on the bookkeeper to flag anything unusual. And then there was the trust factor. Parents trusted Elisa because she had been there for years, because she remembered their children's names, because she was warm and competent and unflappable when a payment got returned or a deadline got missed. The head of school trusted her because she had never given any reason not to. The board trusted her because the numbers always balanced. The numbers always balanced. That was the mantra her mother had taught her at the kitchen table 30 years earlier. And that was the rule she was about to break, in a way that would take 3 years and a federal investigation to undo. The scheme started in 2018. Sometime that year, Elisa Gisser logged into PayPal, not the school's PayPal account, her own. She had a personal PayPal account that she had registered years earlier under the name of a small side consulting business she ran on weekends, helping local sole proprietors with their bookkeeping. The account was legitimate. It was tied to her personal bank account. It had her name on it, but it was registered as a business account under the consulting LLC. She went into the account settings, and she changed the business name on the account. She renamed it to match the Odyssey School. The technical change took less than a minute. The financial impact would take years to measure. After the rename, the PayPal account looked to any parent receiving an invoice or a payment instruction, like it belonged to the school. The display name on incoming payment confirmations would show the school's name. The email receipts parents received would show the school's name. From the outside, there was no way to distinguish the renamed personal account from a legitimate school account unless you knew exactly what the school's actual account identifier was. And parents did not know that. Once the account was renamed, Elisa began directing parents to send tuition there. Not all parents, not all the time. She picked specific payments. She sent emails from her school address with payment instructions, attaching her PayPal link. To parents who asked, she described it as a new processing arrangement, or simply did not explain at all. Parents complied. They had no reason to suspect anything. The account name on the receipt matched the school's name. The first diverted payment hit her personal bank account in early 2018. She watched it clear. She waited. Nothing happened. No alert. No call. No question from the head of school. She had successfully intercepted a tuition payment, and on the school's side, that family's tuition appeared to be unpaid. That was the moment of choice. She could have refunded the payment. She could have stopped. She did neither. Instead, she opened the school's accounting software. She found the student whose tuition had been diverted, and she manually entered a payment into the ledger, marking it as received, dated to match the actual transaction date. To anyone reviewing the books, that student's tuition account looked current, paid in full, no outstanding balance. The reconciliation report at the end of the month would balance because Elisa controlled the reconciliation report. 3 problems solved with one set of keystrokes. The money was in her personal account. The student's tuition status was current in the school's books, and the school's monthly financials still appeared to match. She did it again the following month, then again. By the end of 2018, she had diverted enough money to make a noticeable difference in her household finances. She used some of it to pay down credit card balances that had accumulated during a stretch when her husband's commercial real estate income had been thin. She used some of it for the mortgage on the Leander house. The relief was immediate. The crisis felt over. But the crisis was not over, because the source of the relief was theft, and theft has only one sustainable trajectory. It escalates. In 2019, she increased the frequency. More parents were directed to the renamed PayPal account. She got bolder about which payments she diverted. She did not bother to ration anymore. If a payment landed in the renamed account, it was hers. She would post it as received in the school's books, and she would move the funds out of PayPal into her personal checking. The transfers happened on a regular cadence, weekly, sometimes more. She also started using the money for things her household had not previously been able to afford. A landscaper to redo the front yard, a new vehicle, and then, in the summer of 2020, the in-ground swimming pool. The pool went in over the course of several weeks. Excavation, plumbing, decking, tile, the whole project. The cost ran into the tens of thousands of dollars. The neighbors saw the construction crew. The neighbors saw the pool when it was finished. Elisa hosted small gatherings around it. She did not hide it. She did not need to hide it, because nobody in her professional life had any visibility into her personal spending, and nobody in her personal life had any visibility into the school's books. The scheme accelerated through 2020 and into 2021. Some months the diverted amount exceeded what her actual salary from the school would have been for the same period. She was, by any honest measure, drawing 2 incomes from the school, one as a paid employee and one as an unauthorized parallel beneficiary. And she compounded the fraud with a second layer. The money she stole was income. Income is taxable. She did not report it. Across the years 2018 through 2021, she underreported her household income to the IRS by more than $863,000. The tax returns she filed during those years looked normal. They looked like the returns of a middle-class bookkeeper and her commercial real estate husband. They did not look like the returns of someone who had quietly added $1 million in untaxed cash to her balance sheet. No one noticed. No one checked. Therefore, the scheme grew. We are heading into the moment the school finally figures this out, and then into the federal investigation that tore the whole scheme apart. If you have made it this far, that is because the story actually deserves the attention. Subscribe if you appreciate accountability coverage. We do this every week, and we do not look away. The discovery did not come from a federal agent. It did not come from a tip line. It did not come from a parent demanding answers. It came from the school itself. In 2021, somewhere in the administrative operation of the Odyssey School, something did not add up. The exact trigger is not in the public record. It may have been a parent calling to ask why they were receiving a late tuition notice when they had paid. It may have been a routine reconciliation review that finally went one step deeper than usual. It may have been a new staff member asking a question that the existing staff had stopped asking years ago. Whatever the trigger, the school began to look. When you look at the Odyssey School's PayPal records and you compare them carefully against the school's accounting ledger, a strange pattern emerges. The ledger shows payments received for student A, student B, student C. The PayPal account shows those payments arriving and clearing. But when you cross-reference the two, certain payments appear in the ledger that do not appear in the PayPal account. Or rather, they do not appear in the school's PayPal account. They appear in a different account. An account with the school's name on it, but a different account identifier. An account that the school does not control. That is the moment the bottom dropped out. The school's leadership pulled the records. They pulled the bank statements. They pulled the PayPal transaction history. And they began the painful work of figuring out how much had been taken and over what period. Elisa Gisser was confronted internally. The exact dialogue is not public. What is public is the result. She was dismissed from her position. Her access to the school's accounting system was cut. Her keys were collected. Her email was disabled. Whatever explanation she offered in that meeting, whatever she said about why a PayPal account with the school's name had been receiving school payments and routing them to her personal bank, it was not enough to keep her job. But losing the job was not the worst thing that was about to happen to her. The school referred the matter to the IRS Criminal Investigation Division. IRS CI is the federal law enforcement arm responsible for tax crimes and large-scale financial fraud. Their special agents are trained accountants. They carry badges and firearms, and they have access to bank records, tax returns, and financial transaction databases that civilian investigators do not. A special agent was assigned. The case opened. The first phase of an IRS CI investigation is quiet. The target rarely knows it is happening. Subpoenas go out to PayPal, to Elisa's personal banks, to the school, to her credit card companies, to the contractors who had been paid for work on her property. The agent builds a transaction-level map. Every dollar in, every dollar out, every transfer between accounts, every reconciliation entry in the school's books that does not match a real deposit in the school's bank. The map took months to build. While it was being built, Elisa Gisser was no longer working at the Odyssey School, but she was still living in the Leander house, swimming in the pool that the diverted tuition had built, paying the mortgage with money that was no longer flowing in. She knew the school had figured it out. She did not yet know the IRS had been called. She would find out. The IRS Criminal Investigation Division does not work the way a state-level fraud unit works. IRS CI special agents are not detectives running down witness statements. They are forensic accountants with arrest authority. Their entire methodology is built around one principle: follow the money in writing with documents until every dollar is accounted for. The investigation into Elisa Gisser produced a body of evidence that left no room for ambiguity. First, the renamed PayPal account itself. PayPal records show the exact date the business name on the account was changed. They show the original name, registered to her personal consulting LLC. They show the new name, identical to the Odyssey School. They show every incoming payment after the rename, with sender names, amounts, and timestamps. They show every transfer from the PayPal account to her personal checking account at a bank in Central Texas. That data alone was a confession. Second, the school's accounting ledger. Investigators obtained a forensic copy of the school's books for the years in question. They identified hundreds of ledger entries that Elisa had personally created, marking tuition payments as received. They cross-referenced each entry against the school's actual bank deposits. The pattern was unmistakable. The ledger showed a payment. The school's bank account never received it. The renamed PayPal account did. Third, the bank records. Elisa's personal checking account showed transfers from the renamed PayPal account on a recurring basis throughout 2018, 2019, 2020, and 2021. The transfers totaled more than $1 million. Investigators traced the outflows: mortgage payments to her lender, credit card payments to multiple card issuers, payments to the swimming pool contractor in 2 installments during the summer of 2020, payments to landscapers, auto dealers, and various household vendors. Fourth, the tax returns. Investigators pulled her personal returns for tax years 2018 through 2021. They compared the reported income against the deposits flowing into her accounts. The gap was more than $863,000. Money she had received, money she had spent, money she had not declared. Fifth, the swimming pool. The pool was concrete, literal evidence. Investigators obtained the contract, the invoices, and the payment records from the pool company. They tied the funds used to pay for the pool directly back to the renamed PayPal account, and from there back to specific parents at the Odyssey school. There is a strange and brutal clarity to that paper trail. A parent paid a tuition installment for their child with a learning disability. That installment funded the tile around Elisa Gisser's pool deck. There were no text messages to dramatize. There were no co-conspirators to flip. There was no informant. There was just paper, a bank record, a PayPal record, a ledger entry, a tax return, a pool contract. Stacked together, the paper made every defense she might have wanted to mount impossible. When the special agent was ready to bring it to a federal prosecutor, the package was complete. 2 charges were proposed: wire fraud, because the scheme had moved money electronically across state lines through PayPal's infrastructure; tax evasion, because the income she had stolen was unreported on federal returns. The prosecutor accepted the package. A federal grand jury was convened. An indictment was returned. She would be charged in the Western District of Texas. The confrontation that mattered did not happen in a hallway with a body cam. It happened in a quiet conference room with a federal prosecutor on one side of the table and Elisa Gisser's defense attorney on the other. By the time she sat down for that meeting, the IRS-CI special agent had already laid out the file. PayPal records, ledger forensics, bank traces, the pool contract, the unreported income. Her attorney had reviewed all of it. There was no version of the case where a jury would not see the renamed PayPal account and the doctored ledger entries and conclude exactly what the government would argue. The conversation in that room would have been short. Prosecutor: your client is charged with wire fraud and tax evasion. The wire fraud count alone carries up to 20 years. The tax evasion charge carries up to 5. Prosecutor: restitution is going to exceed $1 million. Our recommendation, if she accepts responsibility and pleads guilty, is in the range of 30 to 36 months. If she goes to trial and loses, we will be asking for substantially more. Her attorney would have walked her through it: the math of the case, the math of trial risk, the math of a pre-sentencing report that would, if she cooperated, describe her as remorseful rather than defiant. She pleaded guilty. The plea hearing was held in federal district court in the Western District of Texas. The standard colloquy: did she understand the charges? Yes, Your Honor. Did she understand the maximum penalties? Yes, Your Honor. Did she understand she was giving up her right to a jury trial? Yes, Your Honor. Was anyone forcing her to plead? No, Your Honor. Was the plea voluntary? Yes, Your Honor. Did she do what the government alleged? Yes, Your Honor. That last word closed the door. The federal magistrate accepted the plea. A sentencing date was set. The case moved forward. Between the plea and the sentencing, Elisa Gisser remained free on conditions of release. She lived in the Leander house. She did not swim in the pool. She waited. The sentencing hearing was held on April 9, 2026, in the federal courthouse in Austin, Texas. The case had been investigated by IRS Criminal Investigation, prosecuted by the United States Attorney's Office for the Western District of Texas, and now landed in front of a federal district judge for final disposition. The government's sentencing memorandum was direct. The defendant had been entrusted with the financial operations of a small, nonprofit school serving children with learning disabilities. She had exploited that trust over a period of multiple years. She had impersonated the institution by renaming a PayPal account. She had falsified the institution's own records to conceal her theft. She had used the proceeds to pay her mortgage, her credit cards, and to install an in-ground swimming pool at her residence. She had then compounded the fraud by failing to report more than $863,000 of stolen income on her federal returns. The government asked for a meaningful prison sentence, not the maximum, something proportional, something that would signal to other small nonprofit bookkeepers that the IRS does, in fact, see this kind of scheme, and that the federal system will prosecute it. The defense filed its own memorandum: acceptance of responsibility, no prior criminal history, family circumstances, cooperation with the investigation, restitution agreement. Her attorney asked the court to consider a sentence at the lower end of the guidelines range. The Odyssey School submitted a victim impact statement. The school's leadership described the institutional damage. The cost was not only the dollar figure, it was the breach of trust between the school and the families it served. It was the time and energy diverted from educating children with learning differences into auditing years of doctored books. It was the chilling effect on small nonprofit governance everywhere, because if a bookkeeper at a 90-student school could divert more than $1 million and hide it for 3 years, what does that mean for every other small school in the country? When it was her turn to speak, Elisa Gisser addressed the court briefly. She apologized to the school. She apologized to the families. She said she had let down people who had trusted her. She did not offer a financial explanation. She did not try to minimize. The judge then delivered the sentence: 33 months in federal prison, restitution in the amount of $1,318,684.34, a money judgment of $1,049,012.34, supervised release to follow her term of imprisonment. The judge noted, on the record, that the defendant had not taken from a faceless institution. She had taken from a school for children with learning disabilities, children whose families